Welcome back for another deep dive. Today we are looking at Bit Digital's Q3 2024 financials.
Yeah.
And let me tell you, this company is really changing things up. They've been known for Bitcoin mining, but now they are making a big move into high-performance computing. HPC for AI, and we're going to figure out why.
Yeah, it's a pretty bold move, especially with how the crypto market is right now. Our main source for this is Bit Digital's Q3 report, and it shows a company that's at a crossroads, dealing with problems in their main business while also trying to grab a huge new opportunity.
Okay, so before we get lost in all the numbers, can you give us like a quick explanation of EBITDA? It's one of those terms that gets tossed around a lot, but I'm not sure everyone really understands it.
Sure, EBITDA stands for earnings before interest, taxes, depreciation, and amortization. You can think of it like a snapshot of how profitable a company is, like stripping away all the financial stuff to see how well their core business is actually doing.
Okay, that makes sense. So with that in mind, let's jump into the Bitcoin side of things. The report mentions halving, and it sounds like that's been a real hit to their Bitcoin mining revenue. So what exactly is halving, and why is it such a big deal?
Imagine you're playing a video game where the rewards you get for finishing a level are cut in half every few years. That's basically what halving does in Bitcoin mining. It's a programmed event that reduces how much Bitcoin miners get for adding blocks to the blockchain. And it happens about every 4 years. So this past April, Bitcoin went through a halving event, and it directly affected Bit Digital's revenue, showing like an 11% drop compared to last year's Q3.
So less Bitcoin reward means less revenue. Seems pretty simple. But the report also talks about other things squeezing their profits,
Yeah.
like these record low hash prices. Now I'm guessing that's about computing power. But could you break that down for us?
Yeah, you got it. Hash rate is basically the measure of computing power used to mine Bitcoin. And a hash price is like the cost of that computing power. So when hash prices are low, it means the reward for mining is lower compared to what it costs to do it. It's like trying to sell lemonade when everyone already has some. It makes it harder to make a profit. And on top of that, you've got those seasonal electricity rate hikes mentioned in the report. So Bit Digital is facing a tough situation in the Bitcoin mining world.
Yeah, that's got to be rough.
Yeah.
So how are they dealing with this? The report says they're holding back on upgrading their mining fleet. Is that kind of like trying to patch a leaky roof when you really need a whole new one?
It's more like strategically waiting for the rain to stop before you replace the roof. They're holding off on upgrading until a hosting contract runs out. This way they can replace all their old, less efficient miners at the same time, instead of bit by bit. It's a bit of a gamble, though, taking a short-term hit to their profits for a possible long-term gain in efficiency.
That makes me think, are they pushing HPC to make up for these mining struggles? I mean, their HPC revenue just shot up to $12.2 million this quarter, up from zero last year during the same time. That's not just growth, that's an explosion.
Yeah, it definitely shows where their focus is moving. The HPC market is really taking off right now, all because of that huge demand for AI, which
Yeah.
is quickly becoming a part of our everyday lives.
I'm even using AI to help me write these scripts. And speaking of AI and HPC, the report mentions this deal with Boostroid Inc., a cloud gaming company. Bit Digital's giving them 300 GPUs, and the projected revenue is $4.6 million over 5 years. But get this, there's a chance they could jump to a crazy $700 billion. So is this a sign that Big Digital's going all in on HPC?
It's a big signal for sure. This Boostroid deal is just the beginning. Cloud gaming is one thing, but the potential for HPC goes way beyond that. As AI keeps getting integrated into like every industry you can think of, the need for high-performance computing is only going to go up. This move could put Bit Digital right at the front of this booming market.
So they're going from digging for digital gold to making the tools for the AI gold rush. But if Bitcoin mining is so tough, why not just ditch it completely?
Well, they haven't totally abandoned it. They still have a bunch of digital assets worth around $118 million. This strategic shift is about diversifying and recognizing the potential of a fast-growing market. It's about using their skills in managing large-scale computing and applying it to something new.
It's a bold move for sure. But before we dive into the nitty-gritty of HPC, let's look closer at Bit Digital's overall financial health. They say they've got strong liquidity with over $105 million in cash and a total liquidity of $223.6 million. That sounds pretty good, right?
On the surface, yeah. Having a lot of cash on hand is always a positive sign, but their adjusted EBITDA for Q3 was negative $21.8 million. And that includes a $21.9 million unrealized loss on those digital assets we talked about.
So they're losing money on their operations and taking it on their crypto holdings. That doesn't sound as great. What does this negative EBITDA really mean? And what does it tell us about how healthy they are financially?
Negative EBITDA means they're not making a profit from their main business activities. This is partly because of their big investments in HPC, which are eating into their profits for now. The unrealized loss on their digital assets shows how unpredictable the crypto market is. But it's something to watch carefully. It makes you wonder about how much risk they're willing to take and their investment strategy.
So their financials are a bit of a mixed bag. They have the money to make big moves, but they're also taking some big risks. Their success really depends on how well their HPC bets pay off. But hey, that's what makes this deep dive so interesting, right?
Exactly. This is a company that's changing, figuring things out in a complex and ever-changing world. Their story's just starting, and it'll be really interesting to see how it all unfolds.
Yeah, now before we jump into the really exciting stuff about their HPC operations, let's take a little detour into something that's becoming more and more important in every industry, especially in the crypto world: sustainability.
Absolutely. Environmental, social, and governance factors, or ESG. They're not just buzzwords anymore. They're becoming crucial for long-term success in business and attracting investors who care about ethical practices.
And it seems like Get Digital is taking this seriously. The report highlights that a whopping 88% of the electricity their mining fleet uses comes from carbon-free sources. They've also signed the Crypto Climate Accord and are part of the Bitcoin Mining Council. Looks like they're really putting their money where their mouth is when it comes to sustainable practices.
They are, and that's really good to see. The crypto industry, especially mining, has been getting a lot of attention for how much energy it uses, and for good reason. So BitDigital choosing to use clean energy sources really sets them apart from some of their competitors and shows that they understand what investors and customers are looking for these days.
So it's not just about building the infrastructure for the AI gold rush. It's about doing it the right way. But is this enough to offset the energy demands that come with high-performance computing? That's something we'll have to look into as we dig deeper into their HPC operations.
Definitely. Finding that balance between technological progress and being responsible for the environment is something BitDigital and the whole tech industry will need to figure out as we move forward.
Well said. This tricky situation with Bitcoin mining is exactly why BitDigital's move into HPC is so interesting. Let's unpack that next, shall we?
Yeah, it seems like BitDigital's using their Bitcoin mining experience to jump into this HPC world. It's really cool to see them use those skills in a totally new area.
It's like they were training for a marathon, and now they're using that stamina for an obstacle course.
Yeah.
I mean, they've already got a handle on things like getting large-scale hardware, finding cheap energy sources, and managing complex systems. The report actually goes into the specifics of their HPC business segment, which is really helpful.
Yeah, it really shows how they're trying to offer these custom high-end HPC services to meet the crazy demands of AI and machine learning.
So they're not just renting out computing power, they're creating a whole ecosystem. The report mentions building a comprehensive software stack. What does that even mean? And why is it so important?
Okay, imagine this. You buy all the ingredients for a fancy meal, but without the right recipes and tools, you might just end up with a mess. Well, BitDigital is creating that recipe book for HPC. They're giving the software tools and support that make it easier for customers to use the power of their hardware.
Oh, so it's about giving more than just the raw computing power. They're not just selling picks and shovels. They're giving you the blueprints to the AI gold mine. That's a smart move if they can do it. But let's talk money. The report breaks down their revenue and costs for both HPC and Bitcoin mining, which gives us a clear look at their cash flow.
Yeah, that detailed view is really useful. For example, we can see that most of their HPC revenue comes from leasing GPU servers. Those are like the heavy lifters for AI and machine learning, which makes sense when you think about what's driving the HPC boom.
Yeah, that makes sense. But when you look at costs, they have a lot of expenses related to those GPU server leases, as well as data center leases. And of course, electricity is a big cost for both HPC and Bitcoin mining. Running this whole operation isn't cheap.
It really shows that HPC, just like Bitcoin mining, is a capital-intensive business. You got to have the right infrastructure, hardware, and a reliable, preferably sustainable energy source to make it all work.
Okay, but it seems like they're handling their money pretty well, right?
Okay.
They've got that strong cash position we talked about, and they're bringing in good revenue from both sides of their business. Are you worried at all about those service credits they mentioned, though? They gave one of their HPC customers a $1.3 million credit in Q1 and another $0.6 million credit in Q3. Could this be a sign of trouble?
Well, service credits are pretty normal in tech, especially with new tech and complex setups. But they do bring up a good question. Are these just growing pains? Or do they show deeper problems with how reliable their early HPC offerings are? It's something we'll have to watch as their HPC business grows.
Yeah, good point. It's worth remembering that even with these credits, their HPC revenue is still going up fast. So it's not necessarily a bad sign. Now let's talk about those environmental promises. 88% carbon-free energy for their mining fleet, signing the Crypto Climate Accord, joining the Bitcoin Mining Council. They're really walking the walk.
It's definitely more than just talk. These actions show a real commitment to ESG principles, which could make them stand out. As more and more investors care about sustainability, Bit Digital's commitment could give them a real edge over others.
Yeah, it makes you wonder if they're thinking about sustainability for their HPC operations too. I mean, high-performance computing uses a lot of energy. Are they doing anything to address that?
That's a great question. The report doesn't really say where the energy for their HPC operations comes from, so it's something we'll have to keep an eye out for in future reports. If they can stick to using renewable energy as they expand their HPC business, that would be a big win for them, both for business and ethically.
Yeah, I agree. Now, the report also dives deep into their Bitcoin mining business segment. It gives us a look at their history and current strategy. They started mining Bitcoin back in February 2020, and they've been through a lot in the crypto market since then.
They've had to adjust and change, especially with those halving events and the fluctuating Bitcoin prices.
Yeah, the report breaks down their Bitcoin production over the last 9 months, and it's interesting to see how the halving event affected their output. Have they been able to change their strategies to stay profitable in this crazy market?
They've been pretty active in managing their mining partnerships and infrastructure. They have agreements with different hosting providers in North America and Iceland, so they're strategically placed in areas with cheap energy and good regulations.
But it hasn't all been smooth sailing, right? The report mentions a fire at one of their facilities and a regulatory issue at another.
Those incidents show the risks that come with Bitcoin mining, things that can be affected by outside factors that are totally out of the company's control. But Bit Digital has shown that they're willing to adapt, like they ended a hosting agreement with BlockFusion after a bunch of problems, and they're currently in a lawsuit over some deposits and advances.
That shows they're not afraid to make tough choices and walk away from deals that aren't working. They're protecting their investments and taking their business seriously.
Now let's talk about their ETH staking operations. It's another way they seem to be diversifying. For those who might not know, can you explain what ETH staking is and why Bit Digital is doing it?
Of course, e-staking is a pretty new way for people who hold Ethereum to earn rewards by taking part in the network's consensus mechanism. It's a way to make passive income from your digital assets. Bit Digital has been looking at different ways to do ETH staking, including both native staking and liquid staking. Yeah, they've teamed up with different service providers, like Blockdaemon, Stakewise, and Coinbase. To manage these staking operations, it seems like they're really trying to stay ahead of the game in this fast-changing market.
They are. They've even started testing out a new staking protocol called EigenLayer, which lets them restake their ETH that's already staked to get even more rewards. It's like double dipping in the world of crypto staking, but it's also riskier.
Wow, that's really interesting. So they're not just trying ETH staking, they're jumping in head first. But are they being reckless, or are they carefully weighing the risks and rewards?
It seems like they're being careful. They're experimenting with new tech and strategies,
Yeah.
but they're doing it cautiously, balancing innovation with risk management, which is super important in the unpredictable world of crypto.
That makes sense. This ETH staking strategy really lines up with their move into HPC. It's like they're saying, we're not just Bitcoin miners anymore. We're a tech company exploring everything the blockchain has to offer and more.
Totally agree. They're not afraid to embrace new technology and adapt to the changing crypto world. This willingness to innovate and change could be their biggest strength as they face the challenges and opportunities ahead.
Now, with all this focus on HPC and ETH staking, it's easy to forget that Bit Digital still has a big Bitcoin mining operation. How are they handling this older part of their business along with these new ventures? It seems like a lot to juggle.
It definitely is. But they seem to be taking a balanced approach. They're not ignoring their Bitcoin mining roots, while strategically setting themselves up for growth in new markets.
Yeah, they're keeping a foot in the world they know, while building bridges to new areas. It's a bold and ambitious strategy, and it'll be really cool to see how it all turns out. Speaking of seeing how things turn out, let's take a step back and think about everything we've learned. Before we wrap up, what are your biggest takeaways from this deep dive?
Yeah, it's pretty amazing to see how they're evolving. It's like watching a startup grow up, becoming a real player in the game, taking on these new challenges and opportunities. with a mix of confidence and caution.
They're definitely not just sitting around. This deep dive has shown a company that's changing, figuring out how to navigate this crazy crypto market, and getting ready for a future built on high-performance computing and all the possibilities of blockchain technology.
Right.
So let's recap some of the key takeaways for our listeners. Bit Digital is facing some serious challenges in Bitcoin mining. That halving event has really hit their profits.
Yeah.
And they're being smart about when and how to upgrade their mining fleet.
Yeah, but they're not giving up on Bitcoin completely. They're still holding on to a lot of digital assets. It's like they're hedging their bets while also branching out. It's a smart move. It shows they still believe in cryptocurrencies for the long haul, while also knowing they need to adapt to a changing market.
And of course, their big bet is on high-performance computing. We've seen some incredible growth there. Driven by that huge demand for AI in so many industries, they're making deals, building a whole ecosystem around HPC services,
Yeah.
and showing that they're more than just a hardware company.
Right, and their move into HPC isn't just about chasing the latest trend. It's a strategic move. They're using their experience in managing large-scale computing operations, sourcing energy, and dealing with the complexities of the crypto world.
And they're doing it all while committed to sustainability, which is really great to see in an industry that's often criticized for its environmental impact. Their focus on renewable energy for their mining operations, their participation in the Crypto Climate Accord, and their membership in the Bitcoin Mining Council all show a real effort to balance technological progress with taking care of the environment.
Yeah, that commitment to ESG could be a big advantage for them. It could attract investors and customers who care about ethical and sustainable practices.
But it's not all perfect. Their financials are a bit of a mixed bag. They have a lot of cash on hand, but they're also operating at a loss, partly because their big investments in HPC Plus, that unrealized loss on their digital assets, reminds us just how volatile the crypto market can be.
Their success really depends on how well they carry out their plan, how they manage those risks, and how they stay ahead in a tech world that's always changing.
It's a high-stakes game, but it seems like they're ready for the challenge. They're adapting, innovating, and taking calculated risks, and their willingness to try new things like ETH staking shows they're committed to pushing the boundaries in the crypto world.
It's a really interesting example of how businesses can transform. They're not afraid to disrupt themselves, to change their identity, and embrace something new. They're not just Bitcoin miners anymore. They're tech pioneers shaping the future of computing.
So what do you think? Are they on the road to success, or are they heading for trouble?
Well, only time will tell. But they have a lot going for them. Their experience, their vision, their willingness to adapt and change. All those things suggest they could become a major player in HPC and beyond.
It's definitely a company to keep an eye on, but we're not fortune tellers. We've looked at the data, analyzed the trends, and broken down the strategies. Now it's your turn, listener. What do you think about Bit Digital's future? Do you see them as a leader in HPC? Or are they trying to do too much in a risky market? We'd love to hear your thoughts. Until next time, keep diving deep.